Hi friends, welcome to my channel. Friends, today we are going to discuss something very interesting. If you are an option buyer or even if you're an option seller, this video is going to be very helpful, right? Because we know that option buyers, most of the option buyers are not making money from the market, right? And of course, option sellers are making money to an extent, but the new severe regulations are going to come, and there are a lot of restrictions going to come on the derivatives for retail traders. In fact, the number of the lot size is going to increase, and even the margin requirement is going to increase. So a lot of restrictions is going to come, so that SEBI wants the retail investors to not to lose much money in the market. So how do we face this, and how do we can take it into the better way, right? So friends, in this video I'm going to show you, if you're an option buyer, because option, why do we play in option buying? Most of the option buyers are in the market because option buying required a lesser capital, right? You can enter into a market with a lesser capital. That's a major reason why most of the people are in the market and they are into option buying. So today, I'm going to show you a strategy which required a lesser margin, but you don't have to be in option buying. With option buyers, the probabilities are very less, right? I'm going to show you that how is the probability works, and option sellers got a better probability. So how you can play in option selling with a lesser amount. That's what I'm going to show you. It will be a very interesting session, and I'm sure that option sellers, because you guys are going to have a bigger problem, since the SEBI has already put a proposal to increase the margin. So when the margin is increased, it will be difficult for you to enter into option selling position, because you need to keep a bigger margin, right? And in this video, I'm going to show you how you can solve all these problems and how you can trade in a better and efficient way, right? So friends, before going in detail, I want to give you a disclaimer. This video is purely for an education purpose, so I don't guarantee you any profit or success from this strategy, what I'm going to discuss. This is purely for an educational purpose, and you make sure you do back testing, you do your own risk and reward management, and also invest only capital which can risk. That's only you should be invested in the market, right? So I'm going to show you what is the strategy is all about, right? So friends, this strategy I'm going to show you in Bank Nifty. Most of the, I mean, you can trade in Nifty or Bank Nifty, but most of the time I trade in Bank Nifty. That's why I'm showing in Bank Nifty. So let me first open a chart and do a basic analysis. What is my expectation on Bank Nifty today, right? For example, let me share this screen. Yeah. So friends, you can clearly see that this is a Bank Nifty chart, right? This I have opened in my Angel One account, right? Angel One got a lot of good features which will help you to automate your trade, or with a single click you can execute many trades, right? So, and the charting also, one of the best charting what I have seen is with Angel. So this is how the charting. Basically, I used to use Trading View before, and now I'm full into algo trading. So my system automatically do trades, do analysis and trades. But for any analysis, now I have moved out from Trading View and I am using my Angel One account, right? So wonderful charting software they have. Now let me take, this is a Bank Nifty chart. Friends, you can see a Bank Nifty chart. You can see it was continuously going up, and it went to a peak of some 53,300 changes level. From there, if you see, there was a correction, right? And on August 5th, you can see that there was a gap down created, right? Gap down created. Then again, from there, it was consolidating and started moving up. If you see yesterday, the Bank Nifty has closed above 20 EMA, which is a good, see the complete candle, even though it's a very small candle, it's not a strong candle, but still it is showing a bullish strength, right? And also you can see during this fall, it has taken support. If you see these levels, right? 1 and 2, these levels where it took a support. So this was a good support zone. From there, if you see 2 times it came and tested the support and started going up. So this is a daily chart. So overall for me, it looks like it can be a bullish. It can be a bullish day for today, right? Already market is started and it's running bullish, but it's a sideways day. What's happening today, right? Now for intraday, let me do an analysis. This is a daily chart. So we do different time frame analysis. So today's video is not on analysis. So friends, for analysis part, maybe I will do a different video. But today's video is all about how you can trade in option using a small investment amount and how you can do it in an efficient way, right? Now let me change it to a 15-minute charts. So you can see my chart. In my chart, I have 20 EMA and the plain candlesticks. And also I use one more indicators. I used to talk about this indicator a lot during my previous videos. People who have watched my previous video know that CPR, right? Central Pivot Range. So here, I don't want any color, right? Okay. Now, if you see, so from morning, the 15 minutes candle, if you do an analysis, morning it created a big candle. That itself, the 15 minutes candle was a big candle. That itself was showing it can be a sideways day, right? Okay, now the CPR range also showing me it can be a sideways day, right? So it overall it looks a sideways day until unless it breaks some certain level, either on the previous day's high or today's high or the previous day's low. That's what I normally look, right? Otherwise, overall it's look a sideways day for me. Now, for me, like since I was overall in the overall trend, I was expecting a bullish trend. I am bullish in the market. Now, what should I do? If I am bullish in the market, what should I do? Right now, let me open an Excel. Tell you the basics of some concepts. 1 minute. Let me share an Excel. Yes. So, friends, if you are an option trader, and if you are bullish, right, you have two way you can trade. Either you can buy a call Europe, right, call option, or you can sell a put option, right? If you are bullish, you can either buy a call option or you can sell a put option. Now, if you are bearish, what you can do? You can buy a put option, put European, or you can sell a call option. These are the two options available for you, right? So according to your trend, you can either you can buy or a call option or a sell a put option here. If it's a bearish trend, then you can either buy a put option or sell a call option, right? And most of the people, they prefer to buy option because it's required a lesser capital. But friends, in this video, as I mentioned earlier, here I'm going to show you with a lesser capital how efficiently you can trade, right? And make a reasonable return for the market, right? Okay, now which one should I do? If I understand it's a bullish or bearish, what should I do? Should I go and buy a put option, or should I go and buy a call option, or should I go and do a selling put or call, right? Now, before that, we should understand how does the probability works, because trading is all about probability, right? There is no holy grail in the market, so it's all about probability. So let us understand the probability of winning in both the business, right? Now, as all we know that we have, let us say if I am an intraday player, I have either I can have an uptrend day, correct? Then we can have a downtrend day, true? Then we have a sideways days, correct? Then we identify one more called, or you know that, high volatile day, right? So according to our study, 10% of the time market will be high volatile and 60% of the time market will be sideways. And all these two put together, 30% of the time market remains trending, right? This is what the statistics shows. True? Yes. Okay. Now, so we know that 10% of the time it's a high volatile market. I know that I want to make mistakes. Okay, I cannot be perfect in this. So here I will make mistakes. So I'm okay to make that mistakes. But I have another 90% of the day which I want to make, right? Now, let me see if I am bullish in the market. Okay, now what I can do, either I can go and buy a call option, right? So let us say I'm going and buying a call option, and there is another guy, one of my friend, and he is going and selling a put option, right? Now let us see market remain sideways. We know that 60% of the time market remains sideways. What is going to happen to me? I will make loss, right? I will lose money because I will have a theta decay, time value decay, right? Because an option has two values. One we call it as intrinsic value, and another one we call it as a time value, right? So the time value will come down so that I will make a loss in the market. But same time, the seller, my friend who sold a put option, he will make profit, right? He will make some money because he will get a theta decay advantage, time value decay advantage, right? We call it as a theta, that's a Greek name. Then, if market goes down, right? What will happen? I will anyway lose money because I am on a bullish side, I am on a call option. He will also lose money, right? He will also lose, he will make loss and loss, right? Then, if market went up, what will happen? I will make profit, he will also make profit, right? So here, when market comes down, I will lose maximum up to my premium, he will lose maximum up to his stop loss, correct? If it goes up, I will make profit, he will also make profit. Now here, what happened? Out of three, if you see, I have only one time probability of winning. And same time, my friend, the seller of the put option, has 2 times out of 3, right? That means the buyer is having only 33% of probability, seller have a 67% of probability. This is a very important concept. All the option buyer and option sellers should understand it. All the option traders should understand it. The seller has a higher winning probability in option selling, right? But the problem what? Option selling required higher margin, right? That is why most of the people, even after knowing that okay, option selling gives a better probability, still they are not able to enter into the market because it required a higher margin, right? For example, let me just check a margin calculator. Let me open. Okay, in Angel 1, we have a calculator called Angel 1 margin calculator, right? So here, if you take margin, for example, let us say I am selecting let me take exchange as an NSE F4, right? Product is, for example, option. And let us take Bank Nifty, right? Bank Nifty, we have 28 expiry, right? 28. We have 28 expiry, right? And also I'm just taking for a just an understanding call option, right? And currently it's at around 51,000 level. So we will take a 51,000 call option, right? I want to sell. Now let us understand what is a margin requirement, right? 15 sell. Okay. Now if you see, to sell one lot of call option, I need around 1 lakh rupees margin, right? So this is an issue for all the option traders, right? Now, friends, how do we solve this issue, right? Now we will go back. We'll go back to our chart and we will do it trading now. We will see how we can trade. Now, okay. Now let us come back and concentrate only on the first 15 minutes candle. And according to overall my analysis, it says that I am bullish in the market. Since I am bullish in the market, what should I do? I should sell a put option because I am into high. I want to do high probability gain, so I want to sell a put option. So which strike price I want to do it? Either normally we can do at the money option or in the money option, but I prefer at the money option, correct? So after closing this 15 minutes candle, we know that our at the money will be around 51,000 level. So we wanted to sell it out at the money 51,000 put option, right? Now let me go back to here and we will reset again. We will see option and take bank Nifty. We have 28th expiry. We said that we want to sell a put option and we want to sell a 51,000 strike price put option. Correct? 51,000 strike put option, right? And we want only one quantity, sell at, right? So it says that around 98,000 rupees I need to deposit that. Now, what I am going to do is I am going to add another option, which is again a put option. Okay, but here what I am going to do is I am going to buy that option. It is a far out of the money option, right? After this, I will even give you the proper risk reward ratio, everything, capital management. But listen to this first. So now here I have added a sell, right? I wanted to sell a put option. Along with that, I wanted to add a far out of the money. Let us say 1,000 point out of the money put option. I want to buy it, right? So you see, friends, you should clearly see this. When I added that, you see the margin requirement, it's only 28,795. Now, when I say this, most of the people will have a question. DINOJ, when you add that option buying, again, that option buyer doesn't have a probability. Yes. And you have a high probability of losing that premium what you paid. Yes, I know that, right? But when you see the result, it will be completely different. So people may think that if I add that extra buying, my yield will come down. In fact, no, your yield almost remains same or you make a better yield, right? So now from straight away from a 1 lakh or 98,000, your margin requirement came down to 28,000 rupees, right? So even with a 30,000 rupees capital, you are entering into an option business, which has a higher probability than your option buying strategy, right? Now you understood the basic concept, right? We wanted to sell an option based on the trend. We need to do an identification of the trend. And based on that, we need to sell an option, either a put option or a call option. Along with that, we will add a buy option of far out of the money, right? So that the margin requirement will come down, right? Now, even if SEBI increases, the regulatory increases the margin, it's all for the better purpose. Still, we will be able to manage. Maybe this 28 may go slightly higher, that's it. But it won't go much beyond that level, right? Maybe it can go to a 50, 60,000 level. But still, what I want to say is the requirement of capital compared to the actual capital will be very, very less, right? So here we get an advantage. Now, seeing this, now you understood that the basic entry of the strategy, right? Now we will go back and do how do we manage the risk, right? Here also there is a risk involved, right? It's not that it's very easy. Now let me first show you in the angel one how we can trade it, right? Then just what we need to do is we need to go to basket order. See here, you need to come to angel one and go to basket order. It's very easy here. Just click on a new basket and you want what? You want to have a bullish. We will take a put bull spread, add to basket, right? Now what we are going to do is we are going to sell a put option, right? 51,000 strike price, and we are going to buy a 50,000 put option, right? That's what we discussed, right? Okay. Now from carry forward, I am just making it intraday because this strategy which I am suggesting is only purely for intraday, right? Market order, whatever. And if you do a analysis on this, so now you can see here the margin requirement is only 28,000 rupees, right? Let me do an analysis on this, what it says. So here it says that in this strategy, if I am holding till expiry, I have a I have a probability of winning 64,000 rupees, and my maximum profit is 3,584. It's limited only up to that, and maximum loss is limited to 9,970. So here risk to reward ratio is too bad, right? But this is only if you are holding it for an expiry. So with this strategy, I am not suggesting to hold it for expiry. This is purely for an intraday, right? So this is what the strategy was. And here what happened, with a single click, you can actually place an order, right? Just you can save it, preview the basket, and place the order. That's it, right? In Angel One, with a single click, you can do it, right? Apart from that, in my platform called Algover, you can just automate. You just need to subscribe my algo trading platform, and there you just need to select the strategy. That's it. You don't have to do anything. Analysis part system will do, execution part system will do, monitoring system will do, exit also system will do, right? So everything system will do for you, right? Now, so this is how we can manually execute here. Apart from that, as I mentioned, you can actually select the strategy. You can log into my portal, and here click on login, and from there you can select the strategy and execute in your trading account, right? Okay. Now, coming to the risk management level, should we wait for expiry? No, I said no, we should not wait for an expiry. You should actually exit the same thing within the limit, right? And within the intraday. Now, let me go back to an Excel and show you how does the risk management work, right? So friends, as all we know that we have 20 working days, right? 20 average 20 trading days, right? Now, all we know that since we are into option selling, we have 67% of the time we have a winning probability, and 33% of the time we may lose money, right? Now, how do we manage the risk? For example, if let us say 51,000 put option, you are selling at 250 rupees, and 50,000 put option, this is selling, and you are going to buy, for example, buy at just for an example, some 45 rupees, right? That means you are paying 45 rupees and you are receiving 250 rupees. So that means around 205 rupees is the maximum profit or maximum amount which you can get it, right? So your stop loss also should be limited to this. For example, the combined margin of both these, if it goes to 410, the moment we should cut it. That means 1:1 risk to reward ratio, right? That means on an average, if put together, if let us say if you're gaining 500 rupees, you should be ready to take a 500 rupees loss also, right? 500 rupees just for an amount I'm telling. Some days it can be 1,000 rupees, some days it can be 400 rupees also, right? Depends on, let us say, yesterday was an expiry day on Nifty, and on the same day when we did a bank Nifty, it was only just very small amount what we got it. But when we did it on last Monday or something, we got a huge amount, right? It's again depending on the day to day. But see, on an average 500 rupees profit when you're making, make sure your stop loss should be limited to that amount, right? 1:1 is the risk to reward ratio. In that case, what will happen? So here 67% of 20 is nothing but how many days? 13.4 days, right? So here 500 into 13.4 days you will make money. Here you will lose money. That means net you will gain this much, right? So this is what the strategy. So it means around 3,400 whatever you will be making. Just let us take some 1,500, 1,800 rupees. We will take it as a charges. Still, if you see, you will be making some amount, right? On a capital of, let us say 30,000, if I take, and just calculating the yield after all cost, okay, on a 30,000 investment, you will be making a month around 5% return, right? So here, only thing, it should be systematically with a proper discipline, you should execute it. That's it. You should not, in between, you should not add your risk more, or you should not actually wait for a more reward or whatever. It should be within the limit, right? So what normally I suggest is, one, risk management. It's a 1:1 risk to reward ratio what you need to maintain. Whatever premium, the total premium it's showing, That's a maximum profit you can earn, right? So your maximum loss also should be limited within that, right? Then second one, make sure in case if your stop loss doesn't execute, trigger, you need to exit maximum by 310 or 350, right? Then execute this strategy. It works very well, right? So as I mentioned in the beginning, friends, this is just for an educational purpose. So make sure you do proper back testing, analysis, study, then you execute in the market, right? And if you want to automate this strategy, please contact us. Go to my Algover site, and you can register for a free trial, 7 days free trial, and you can experience this, right? So that's all in this video, friends. So thank you very much for watching. Before winding up, I want to request all you to subscribe the channel. It doesn't take more than 1 or 2 seconds. Like this content, share this video with your other trading friends, because they should also learn. You should spread the knowledge, right? And also, friends, if you wanted to attend our master classes, we have scheduled master classes in all the days. And the link to register for the masterclass is there in the description. So click on the link and register for the masterclass. So we'll meet on the next video. Before that, thank you very much for watching this video, and wishing you all a very happy and successful trading. Thank you very much.